a lot of people just don't understand what is the problem. What's Lightning trying to solve? Bitcoin is not just a store of value. It's also a medium of exchange. Bitcoin treasury companies and even early Bitcoiners are actually in a position to help Bitcoin move forward in this payments infrastructure. Now we have an incentive that says all the store of value people that have accumulated Bitcoin, they'll make more money if they start moving Bitcoin forward into a medium of exchange. The Bitcoin treasury companies are seeing this golden opportunity.
Here we've got a bunch of companies using Bitcoin as a store of value, and everyone's lamenting the loss of Bitcoin as a means of exchange, when in fact it may turn out that that's going to be the biggest catalyst towards propelling Bitcoin as a means of exchange.
Archie.
Jesse Shrader, welcome.
Thank you. It's a pleasure.
It is.
Archie.
It is a pleasure. Yeah, we met the other night. We're having a conversation, and it's like, hey, someone was it Mike was suggesting I get you on the podcast, and I'm like, well, what's the point? And it's like, actually, he's actually a really interesting guy.
No, don't talk to him. Yeah, I don't know.
So like, yeah, I should get you on the podcast. So, it's like, so thanks for joining us, man. I appreciate that.
My pleasure.
Now you're a Bitcoiner. How long have you been a Bitcoiner?
Gosh, sometimes like. One aspect is like, I don't know, does like Bitcoin, draw out the qualities that you have already, or, does it change you? But I think I first found out about it in 2014.
Wow.
But then, and like at that point there was like a faucet where you could like watch an ad, get paid, 10 cents in Bitcoin. Like after a couple of hours of this, and then I promptly gambled it away on whatever gambling site was available.
Yeah.
But I didn't really get it until 2017, and that's when the FOMO kicked in. I was seeing all these like celebratory gifts of like all these people making money on this run up of like 2017.
That was a hell of a bull run though, right? Like from the previous high of, even from top to top, it was 20x, like $1,000 to $20,000. It was a massive bull run, but it went down as low as, was it $180, $200 or something in that bear market?
Oh, that was before my time.
Was it before your time?
But
okay,
yeah.
So it's like,
but I think when I bought, I think it managed to still triple, and I was just mind blown. Like, am I some financial genius that I bought this thing just like on a whim and it happened to triple? But then as it started to crash, that's when I was like, what did I buy? Do I sell this? And that's what pushes you to do the research, figure out what it is that you bought, and then decide whether or not to sell it. And of course, the more you learn about Bitcoin, the more you realize you should never give this up.
It's so true. If you can get through one bear market, right, you are made. It's like, you're a made man in the mafia. Like if you can get through that first bull market, the bear market, and you hold through the emotion of watching your net worth plummet, but that's where you forge your true conviction about what it is you hold and why it is you hold it. And provided you've got the ability to pay the bills, you should be able to do that. And it's the first thing that you should think about in a bull market is, how do I get through the other side of this? Because there will be a downside to this. Like it's pretty good for now, and we may get a parabolic run, we may not. It may just continue, but you should be thinking about, how am I going to get through if there is a 50% drawdown, a 60% drawdown, 70% drawdown? Am I relying on my gains to then pay my bills for subsequent years? And if that's the case, you should use bull markets to prepare for that, right? I know we have a meme of you should never sell your Bitcoin, but if you are relying on your gains to pay your bills and put food on the table, that is your number one concern, all right? And because your objective is to get through the bear market holding as much Bitcoin as possible. Mm-hmm. That's the game. That's the thing that I learned through the last bear market. And it's the one that I'll take. I feel like my diamond hands have been forged now.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance, and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling. Just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money.
You know, it was funny, like starting a company because, you know, the last bull run, you know, it made me feel amazing that, you know,
Invincible,
like
right?
I could, like, maybe I don't need to work anymore. Like, it just like gets that idea into your head. And that was like Amboss at its early stage. So at that point, then
Which year did you found it?
that was 2021. So that was like we had set up the company, and that was actually what pushed me to like quit my job and go all in on this company, this new venture. But like as we were doing that, we actually set up, this is maybe the smartest thing that we ever did, was create a promissory note so that the company owed us. So then when we first took on investor capital, that the investors demanded that we pay ourselves back from the company with that investment round because they didn't want the dilution. And that meant that like we put money in at the top of the market, you know, not realizing it just because we were like so bullish, and then we're able to get paid back at basically the bottom of the bear market.
That's a really interesting thing, because a lot of founders will start and, you know, you're working for zero pay basically when you found a company quite often, or at least there's a lot of sweat equity in there.
Yeah.
And without that entry into your books of an IOU, non-cash, it's a non-cash IOU, but it recognizes the sweat equity. And then that becomes an item on your cap table essentially, right? It's like, hang on a minute, it's like there's an item here, and then the investors see it and they're like, we need you to get rid of that. How are you going to get rid of that? We're going to pay that out. And it's like your sweat equity gets rewarded, not just in cash. Right?
Yeah.
And it was just a delayed salary, wasn't it?
It wasn't like, you know, some greedy scheme,
Sure,
but it was just like a recommendation.
Yeah.
And it ended up being phenomenal. Just because of, you know, market timing and like the ideas that you get in your head in the peak of the bull market, that you're invincible.
Mm-hmm.
And that's where you're putting in the sweat equity. Like you said,
It's the same for people who've bought real estate and, you know, the price of their house goes up and they feel like they're a genius when it's just Jay Powell and Janet Yellen pumping up the liquidity in the market, right? It's the same thing for us as Bitcoiners. I mean, the conviction to buy something that's such and has been such an unconventional asset for a long time, that needs to be applauded for having done the research, held through, you know, bull and bear markets alike. But it doesn't mean you're an investing genius. You made two right decisions, to buy and then to hold. All right, they're two decisions. And if you can do that, congratulations. But it doesn't mean you can suddenly pick stock market winners, for example. It's just like, be grateful that you picked Bitcoin at an opportune time, right?
Yeah. I'm thankful that I picked the one thing that I just should not trade, and like know that about myself. Like, don't try and time the market at all. And just don't get overextended on like any debt that you put into this.
How did you discover Bitcoin?
I think it was first like the faucets and like the gambling stuff, but then the price moves in 2017, I think what resonated with me was that I had taken a temp job that was providing information on class action lawsuits. And the first case that they put me on was about banks reorganizing debit card transactions to maximize overdraft fees that they could charge. So the banks figured out that if they put it in highest to lowest dollar order, if they put the big transactions first, then there were more transactions that were overdrafts at $30 a piece. And so I'm like reading from a script. This is a temp job. I've got an engineering degree, trying to find like a real job in the aftermath of the great financial crisis, where the economy still hadn't recovered. And me as an engineer, I couldn't get a job. And here I was finding out that not only had the banks destroyed the financial system by being over leveraged and taking risky bets, but they were also taking advantage of people that literally had no money. And so I was looking for, at that point, what's the bank that doesn't do this? What's the bank that is honest? And the reality is there wasn't one. At that class action lawsuit place, there was like a whole section of the building dedicated to Wells Fargo. And all of the class action lawsuits that they had, all the settlements that were going on. And like, just like the great financial crisis, nobody goes to jail. These are just settlements. Nobody's ever guilty.
It's the cost of doing business for these banks, breaking the law or exploiting their customers. When they do get found out, it's just a slap on the wrist, and it's the cost of doing business. Nobody really gets punished.
Exactly. They're going to pay pennies on the dollar to all of the harm that, their actions have caused. And then as I got deeper into Bitcoin, I realized that it actually was that answer to it, because you can't implement an overdraft fee policy on Bitcoin because it operates on consensus. So the people that are holding Bitcoin would never approve that. You would have to get all of them to agree on it.
And you either have the Bitcoin or you don't have the Bitcoin. You can't overspend your Bitcoin.
Exactly. The transaction just doesn't work. It's not valid. Mm-hmm. You can't get overextended. It's a, debt and credit-free system. And it's more honest. It's fully transparent. There's not backroom deals that are happening like on the Bitcoin blockchain. It's right there. You can see everything. And, more and more, it just resonated with me as the true alternative to what everything else in the traditional finance world was.
Did you see Bitcoin as a store of value or a means of exchange first?
It was an investment. I mean, it's number go up. Mm-hmm. Like that's what hooks you. Mm-hmm. And, from there, I think, as soon as I got it, I was trying to spend it. And that's when I realized that actual, Bitcoin's ability to be a payment system had a lot of difficulty at that time because transaction fees were super high. And I think I paid $60 in fees just to make one transaction, and it didn't arrive in time. I had a 15-minute window at overstock.com, like one of the only, places that accepted Bitcoin. And it didn't arrive in time. And so when it eventually did arrive, outside of that 15-minute window that they gave me, they had to refund me the transaction, and they say, okay, now send it again. So I'm going to have to do, two $60 transactions for basically make a $60 purchase. I see this, the engineer, we'll see a beautiful system that has a couple of issues. And that's really what I saw. Like, here's the money that I want for the world, but can I make some improvements on this? And so at that point, like 2017, like the Lightning Network was just really getting talked about at that point. It didn't start until 2018. Hmm. And so as soon as, the more and more I learned about Bitcoin and about the improvements that were possible with Lightning, that's when I really got into it. And I think the first application was like feeding chickens that I could pay, 10 Satoshis and some food would drop for some chickens and they would run over.
What? How did this happen?
Okay. It was like one of the first Lightning websites. It was called Pollo Feed.
Are we talking digital chickens or real chickens?
Real chickens.
How is this happening?
Okay. So it was like, I think it was a guy that was like in Florida and he set up a webcam like for his chickens. So you could just like go and watch chickens if you wanted. But he had a Lightning invoice that you could just pay. And so you'd pay, 10 Satoshis and food would drop and all the chickens would run over immediately. And you got the instant feedback that somewhere else in the world, you could interact with money and it would have a real meaningful change. You're paying for the food. The chickens get to enjoy it. I don't know. It was just funny. It was
funny. That's a hilarious concept.
You need a silly thing that gets you in. And so that was like, I think one of the first Lightning experiences that I had where it actually showed that Bitcoin could be a really good medium of exchange.
It's really interesting to see because the first product market fit for Bitcoin was Silk Road, essentially, right?
Yeah.
And so the strongest narrative was quite literally means of exchange. Like you can use Bitcoin to buy stuff on Silk Road. That was an enormously successful product market fit for all sorts of things, right? Yeah. And then much later on, probably after 2017, the whole store of value narrative started to take hold. And it kind of feels like we've left behind the focus on creating Bitcoin as a means of exchange. We have Lightning Network, and now I'm not a technical person, but when I look on my timeline, there are people saying it hasn't taken off. It will never take off. Other people saying, what a marvelous invention now that we've got, is it Spark? There are a bunch of other companies that are working on that. They can now issue assets like stablecoins on the Lightning Network, amongst other things. And so on the other hand, I see that sort of stuff and I go, oh, wow, conceptually, that sounds like a fantastic development. So you are a builder, you're a Bitcoin payments founder and expert. Like, what's the landscape now? What are the prospects for Bitcoin as a means of exchange? Can you give us a better understanding of what's going on?
Yeah.
I should also add, every time I've used Bitcoin Lightning has felt like magic. Like when it works, it feels like magic, right? It's just amazing. Occasionally it doesn't work and it might be the wallet, it might be lack of liquidity. I don't know what it is as a user. All I know is I'm scanning the QR code, tapping, and it's just not going through, right? Yeah. So I don't know what the underlying issues are, but that's kind of like a 1 in 5 experience. Or if I'm like in London, in my neighborhood, Lightning's not really, I'm not going to really tap into too many Lightning channels. But if I'm in El Salvador at a conference or something where the infrastructure is set up, it typically works like magic. It's just beautiful to see. So I just wanted to add that before you gave your answer.
Yeah. I want to take you back to 2021 at the Bitcoin Miami conference. And I think, Bitcoin price was going up and Jack Mallers got on stage and gave his, tearful announcement that El Salvador was going to adopt Bitcoin as legal tender. And I think while it was just a complete change for Bitcoin, I mean, now we're in the next phase of, governments adopting Bitcoin. And for the Bitcoin builders, the ones that are, thinking about how are the people of El Salvador going to adopt a currency where it costs $3 to $5 per transaction and very capital constrained. I think that caused a certain panic. Is Bitcoin ready to be adopted as legal tender, especially for, a moment as important as El Salvador adopting it? And that caused the launch of PlebNet, really, which was basically individuals running Lightning nodes, and they needed a way to communicate and connect. And that was right when we were launching Amboss, which as a Lightning Network Explorer. So
what does that mean? Tell us about your company, what it does, and what is a Lightning Network Explorer? How does?
Well, basically, Lightning is a social phenomenon. It takes two people to create a channel on the Lightning Network where Bitcoin can be exchanged back and forth. What's essentially a joint account. But it takes two people, and they have to be able to find each other and know how to connect. So what a Lightning Network Explorer is essentially a directory of all of the Lightning nodes that are advertising themselves. You're listed in the phone book, and that's what it is at the basic level.
So a Lightning channel is a connection between two Lightning nodes. It's kind of the way that it's been explained to me that made sense to me is kind of like when you've got a tab at the bar, and the tab is settled at the end of the night, for example. So there needs to be, I guess, the bar is assuming that you're good for a certain amount of credit. But with Lightning, there has to be an amount of Bitcoin liquidity injected into the channel. Is that right? Or have I got that bit wrong?
So where the bar tab analogy kind of falls apart is you basically have to prepay.
Yeah.
So you drop $100 bill on the bar tab, and it's prepaid. Now you can deduct from that throughout the night, and then you settle up.
You settle the net balance. So
exactly.
If you've got two parties, whoever it is transacting in there, one might pay the other person then transacts again. So whatever the net balance is of the totality of those transactions, that's what gets settled up.
Yeah.
Right? Yeah, okay. Gotcha. And the liquidity inside the channel, is there a minimum amount that needs to be in the channel? Is there a minimum amount to make it functional? Or say if there's $100 worth of Bitcoin, I don't know how to price that into sats, right? But if there's $100 worth of Bitcoin, does that cap the total value of any single transaction at $100?
Yeah, this is where it gets into technicals. So technically, the minimum is like 21,000 sats.
Mm-hmm.
Okay, at that point, it's just not very useful. You can't put a big transaction through a tiny channel like that.
Mm-hmm.
Sometimes I think about it in terms of like a truck. If you're driving a big, tall truck, you have to watch out for low overpasses, and you have to find alternate routes. So same thing happens for Bitcoin payments over Lightning. You need a big enough channel that has, that clearance to be able to settle a payment. So that's basically what's going on. So if you put down a lot of money into a Lightning channel, the next part is you don't have to trust the other person. You always have your bags packed. And so, the finance guys would say no counterparty risk. So it's basically setting it up. And then from there, you can just transact back and forth. It's not just me paying the bartender. Maybe I have something to sell the bartender, or bartender wants to buy some groceries and I'm connected to the grocery store. So he could pay through me, and it could go both ways. So the value just sloshes back and forth and never touches the Bitcoin blockchain, which means that you don't have to pay for all the proof of work, all the mining that's involved in coordinating the entire globe around a single ledger, because a Lightning transaction happens outside of the blockchain. It's just an agreement between two people governed by digital signatures.
I'm just thinking, you mentioned the clearance as the analogy, but for a transaction, the clearance limit, how is that enforced on a Bitcoin channel? So now the analogy of $100 or 121, let's say it's 100 million sats, right?
Mm-hmm.
So what does that place a limit on? The total value of transactions that total net value of transactions, or is it the maximum value of a single transaction as a result of the liquidity in the channel? I'm just wondering, like, what does that place a limit on exactly? What can be conducted through that channel?
Yeah. So
if it's 100 million sats, does that mean I can pass a transaction through that's 100 million sats or not? Or is that conditional?
yeah, basically it can. In certain cases, that's the max payment size that you could do. Making things a bit simpler. But really, the way it functions is like a joint account. So I'm going to put in $100, and now we have a joint account together. And what is the payout from that joint account? So neither of us can get more than $100. It's always going to be less than that. So the channel, over the life of it, we could have millions of transactions that go back and forth. All of them need to be under $100. But at the end of the day, it's just how are we going to split up the money when we decide to close out this joint account.
Okay. And we close out the joint account based on the net value of the transactions we've both conducted.
Yeah.
Okay. Gotcha.
So like what Bitcoin sees is just the net settlement between two parties after potentially years.
And so what are the barriers for the Bitcoin Lightning Network propagating at scale? Because scale is one of the things that people mention about Bitcoin Lightning. And is that simply a case of, more merchants accepting it, more people opening up channels? Is there an issue with people willing to put up liquidity in these channels? Like what are the barriers to that?
One is just complexity. Like Lightning is hard. If some of the stuff that we're doing is like trying to route payments throughout a network. So we're basically doing like traffic analysis for an entire financial transportation layer. So basically, like how are you going to route a payment, and like what's the most efficient path? It's almost like Waze, like the navigation app, like that. That's basically our function, but it's hard. Like regular people don't know where to build a road. They don't even know how to get to from point A to point B. They need support to do that. And so that's kind of left us in the position to like help support this, give people the math and the algorithms to like make use of this.
I've heard people refer to like balancing Lightning channels.
Yeah.
What does that mean?
So like if I've got a certain amount of value and it's split up between many joint accounts, many different channels, well, I've got $5 here, $10 here, $100 here. Well, like I could make a $100 payment in one direction, but like, how do I make use of the value that's in my other channels? And the rebalancing is basically you can make a circular payment. So I can pay out with one channel and it will circle back into another channel of mine. And that way I can make larger payments, or I might be able to capture more activity that is actually routing through my node, paying me fees each time. So it's a management function, but it's not for the faint of heart.
Yeah, is that a manual thing, or can it be managed algorithmically or with some kind of AI agentic function? How can that be made easier and simpler from an infrastructure point of view?
Yeah. Whatever you add to this to do a rebalance, if you're going to like script it or use some software, you're giving it sending power for your Bitcoin.
Oh, I see.
So we've decided not to do that because we really like self-custody. So we'll offer software that doesn't have that function. I don't want to be able to send your Bitcoin because it makes me a custodian. But what I can do is you give me certain permissions that allow me to create new connections or close existing ones. And that gives me the ability to provide a service to you without being a custodian. And so that's where we've been focused. So instead of just having 3 channels with funds split, I'll just close one of them and let's reopen a bigger one in a more important place. And it's like the entire transportation system for finance just kind of got re-architected to be more efficient.
And so I guess I was asking about barriers to scale.
Yeah.
And I guess we've just touched upon the complexity of just a fairly fundamental part of the Lightning Network, right? Yeah. But like, okay, what about from the merchant side of things? Like the experience as a consumer paying a merchant, like I said, at times, when it works, it just feels like magic. It's just like, I can't believe it's so easy. And oftentimes it's as simple as tapping my phone to pay or a card to pay, and it just feels that good. And I'm just like, what is it on the back end that's stopping us? I guess we touched on one thing, which is, channel management is not simple. Is there a way of making it simpler or easier or more automated that perhaps might open up the possibility for more people to manage their own channel or open up channels?
I think a lot of people just don't understand what is the problem. Like what's Lightning trying to solve? But if you actually run a business, then you'll be familiar with the payment processing costs. Like you're losing, 3 to 4% of every transaction. And then you might be the victim of a chargeback where, you thought you had money, but now the bank is reversing the transaction because someone said, well, I didn't pay for that. And the money gets taken away from you.
Just to give people a little bit of context, like 3 to 4%, even 3%, it might sound like a little bit of money, but the average business is lucky to operate at, net profit margins of 8 to 10%, like really lucky to get those margins and be profitable. So for every $1 that's actually coming in gross, if they're keeping 8 to 10 cents of that, up for an average business, they're doing okay, right? And imagine of that $1, you're giving away 3 cents of that to your payment processor just for allowing you to accept payments. Like the idea of Lightning, which could be like a fraction of that, right? And suddenly you've got a massive 30 to 40% boost to your net profit margin. That's an incredible opportunity. So sorry, I interrupted you. I just wanted to add that context to the opportunity for a merchant. It might sound like a small amount, 3% of total revenue, but as a percentage of the net profit margin, that's a huge amount.
Yeah. We want businesses to be successful. We want them to stop, being stuck in the fiat rat race. And, the technology that we have with Lightning allows us to pay faster, do final settlement for a fraction of the cost of what they've all been used to, and make it more private for the consumer. So with those things, the difficulty comes in is that Lightning does not use debt or credit. And so, while someone may want to pay you, if you're not using credit or debt, that means the infrastructure has to be in place. The money has to be ready to be, signed over to you. And sometimes the money is not already in Lightning. So for a merchant that wants to receive payments, well, they need someone to basically build a financial road to them, open a Lightning channel, and put up the money first. And that's a hard problem because they have to get discovered as a business and communicate to the rest of the Bitcoin network. Hey, I need liquidity in order to receive a payment.
Is that a business opportunity?
Heck yeah, it is. So what we did with Amboss, after creating the Lightning Network Explorer, we created a marketplace so that people could say, hey, I need liquidity. And it really started off somewhat similar to local Bitcoins. I don't know if that was around your time, but basically who could I buy Bitcoin from? Well, instead of buying Bitcoin itself, which is money and, often requires licenses, well, we can sell a Lightning channel, which is not money. It's infrastructure. It's basically a business can say, hey, I want to get plugged into this Lightning network. Who can I pay to give me that connection? And, we're in the place to provide that service. So we'll pay Bitcoiners to open channels to the businesses that need to receive payments.
So we saw, perhaps it was a couple of months ago, Jack Dorsey's block announced that they'd earned something in the order of 8 to 10% yield on Bitcoin. I'm just trying to remember the value of the Bitcoin they put up for liquidity. It might have been like 10 million liquidity and they earned about $1 million on that or something like that. How were they going about doing that? Is that opportunity available to everybody to do? And are those returns scalable?
This one's complicated. What I just explained was for a business, being able to have the liquidity to receive payments, sometimes called inbound liquidity, actually has a market value. And what Block has is an incredible user base that's buying Bitcoin.
The merchant network that they serve, right?
Well, actually on the consumer side.
Oh, okay.
So this is Cash App users.
Uh-huh. Yes.
So they go into Cash App, they put in their dollars and they get Bitcoin for it, and then they withdraw it to self-custody, often over the Lightning Network. So that means these payments are flowing out of Cash App into the broader network. And that's eating up the liquidity at the other end. So what Block figured out through their C equals program is there demand to reverse the payment flows so they can do the withdrawal volume and then reverse it. And they actually make money as the payments start to flow back to them. And they can provide that liquidity to other parts. So they're basically, with all that withdrawal volume, they're selling liquidity in that way. It's definitely something deserving of a diagram because it's very non-intuitive. But because Lightning is completely credit and debt free, there's a market for liquidity. And that is actually what Cash App is generating by doing all those withdrawals into self-custody.
So is it possible that some of these Bitcoin treasury companies that are accumulating large amounts of Bitcoin, from MicroStrategy down to the tens or many hundreds of millions of dollars, some of the smaller ones are accumulating, that the first protocol for them to develop Bitcoin financial services could be as liquidity providers to the Lightning Network? Do you think that can scale? Is there a demand for billions of dollars in liquidity in the Lightning Network? Or is that something like, am I posing that as like a chicken and the egg sort of thing? If there was more liquidity, there'd be more merchant adoption. And if there was more merchant adoption, there'd be a greater demand for liquidity as well. So how do you look at that? Have I framed it correctly? Is that what's required on both ends of that equation? We need more merchants and more liquidity. And if it's concurrent, all the better.
Yeah. Overall, payments are largely a network, and there is a network effect here. Mm-hmm. One thing is Lightning is much better at smaller payments because, it's just been regular Bitcoiners that are kind of doing this as a hobby to actually create this infrastructure. So we're using like hobby infrastructure to route all of our payments, and it still feels like magic. But the reality is that larger payments aren't really possible because you don't have large capital allocators. So this was what was behind, our desire to work with Bitcoin treasury companies to start taking the massive Bitcoin accumulation that they have and actually deploy it and make it payments infrastructure to support Bitcoin itself. Because Bitcoin is not just a store of value, it's also a medium of exchange. And Bitcoin treasury companies and even early Bitcoiners are actually in a position to help Bitcoin move forward in this payments infrastructure. And what that unlocks is that you could pay for any size payment. I just heard about today that there's a wallet that is actually doing car purchases and home purchases over the Lightning Network. And what I found out is that on-chain Bitcoin payments won't work for them because they don't want to take any exchange rate risk. Because Bitcoin is still volatile right now. But if you have instant settlement, that's the unlock. So you need to be able to do large payments over Lightning because the settlement happens so fast. Like forget about everything else.
Are we talking exchange rate risk over a 10-minute block settlement period? Is that what we're talking about?
Yeah.
And they think that volatility is too much for them. I guess when you're talking about a huge amount of value.
Yeah. If they have like, they don't want to put up the money to do the float because that would take away from their cash flows.
Mm-hmm.
It's just very eye-opening to me. But the reality is we want payments to be instant.
Mm-hmm.
And why shouldn't they be? We have the technology, but can we get the Bitcoin in the right spot, in the right placement and right allocation to actually make these very large payments possible? Because you are going to have difficulty routing a payment that large. If you're doing a $50,000 payment, well, like what is the pathway that it's going to take? It's like you're delivering one of those, like on one of those trucks with a massive windmill. Like what road could you actually take? You can't go down an alleyway. That's basically the same problem that Lightning faces. So if we can build the super highways, then we can start moving more of the global economy onto Bitcoin itself. So it could be completely trustless and the payments work faster for whatever size.
Have you had any conversations with Bitcoin treasury companies and have they been willing participants in exploring these types of scenarios?
I think they see a massive opportunity in that space. As soon as we launched our product called Rails, we launched it to be self-custody. And what we learned was most of the Bitcoin treasury companies cannot take self-custody because, it's risk. They've got like risk inside their business where their board has to say, hey, we need to use a regulated custodian. Now, it was unfortunate for us to learn that, but I get the point.
Can't you partner with is it possible for you guys to integrate with a registered or regulated custodian, your services with them so that they can essentially use your products through them? Is that possible?
That's where we're at now.
Right. Okay. Yeah.
So
I always like to try to figure out some workaround.
Yeah.
But, you've obviously been down that path. Okay.
So
what's going on there?
Well, the Bitcoin treasury companies, they, for them, they need to find some way to get yield on Bitcoin.
Mm-hmm.
And so
that's a dirty word given the cycle that we went through, but it need not be because we're talking about a completely different mechanism. Then in 2021, it was rehypothecation. That's not what we're talking about here.
No.
And so we need to be a little bit more intelligent about how we interpret the words that we're using.
Yeah.
Not all yield is equal, right?
Yeah.
Yeah.
So like, anyways, Bitcoin treasury companies need to find ways to get more Bitcoin. And the way that they're doing that is, issuing new shares or, all this, financial wizardry in order to accumulate more Bitcoin. And, I come along with, the Lightning Network that, okay, if I can just make this very simple for them to just bring the Bitcoin and we're going to get you yield that is based on the actual utility. So we're going to make Bitcoin better, and I'm going to give you access to the yield that can come from this, and access to a new market where you don't have to give up custody of your Bitcoin, you don't have to lend it out or introduce additional risk, you don't have to rehypothecate it. You can actually take your Bitcoin and build financial rails with it, and start routing payments and connecting the rest of the world to Bitcoin payment infrastructure.
Are you able to model any kind of yield projections for these sorts of companies? Are you able to share that or not?
I think at this point, the most important piece is that people get access to this market.
Mm-hmm.
And for some of the Bitcoin treasury companies, I think what they're looking at this, and they're seeing it, and I feel guilty for not seeing it myself, but it becomes working capital for them because Bitcoin is not just an investment. Now it's a tool to be able to access a payments market.
Mm-hmm.
And there's a couple of effects of that, is that essentially, Bitcoin can be treated as a tool. It'll be shown as working capital on the balance sheet, and there might be tax benefits to it as well. So the Bitcoin treasury companies are seeing this like golden opportunity to not only change some of the classifications that they have on their balance sheet, but also do something that is meaningfully supportive to Bitcoin, that actually moves Bitcoin forward. When I think Bitcoin treasury companies are going to run into a PR crisis, because, I think a lot of the hardcore Bitcoiners are like, what are you doing? You're just in this for yourselves. There's like stock prices and all this stuff.
The financial engineering aspect of it. But then we've got this potential other opportunity that's opening up.
Yeah.
That says, okay, you've got the Bitcoin. Now what? And you're here like saying, hey guys, have a look at this, right? Yeah. And I think that's incredibly appealing to them. And we should be mindful that if I were to use Michael Saylor and his company as an example, when they first started off, they were just looking for a solution to the inflation fiat debasement problem. Then they realized, hey, there's a capital market appetite for us to raise some debt. They did that. And then November 2024, there was just something completely different happened. There was a massive explosive demand for them to raise capital at a scale that they hadn't anticipated. Even Saylor said, we kind of stumbled upon this opportunity. And now with guys like you building what you're building, it weaponizes, it becomes an incredible financial instrument that can open up. So I just want to go back. Here we've got a bunch of companies using Bitcoin as a store of value, and everyone's lamenting the loss of Bitcoin as a means of exchange, when in fact, it may turn out that that's going to be the biggest catalyst towards propelling Bitcoin as a means of exchange as well. So it's kind of like a symbiotic relationship. One enables the other, even though it's like a second order effect. Who cares, right? If it happens, who cares? If it's coincident, who cares? At least it's an effect. And the more people that use it, the more people adopt it.
The biggest thing for me, I think Bitcoiners are really good at this, is identifying the incentives. Mm-hmm. And now we have an incentive that says, all the store of value people, the people that have accumulated Bitcoin, now they want to move Bitcoin forward because they'll make more money if they start moving Bitcoin forward into a medium of exchange. Mm-hmm. That like Bitcoin is not just what's, increasing the value of your company, but it's going further than that. That you've bought a piece of the financial system of the future, and it starts to behave like that. So I think we've got a lot of momentum right now to start making some meaningful progress towards Bitcoin as a medium of exchange.
Are you able to talk about the types of customers who are most receptive to your pitch?
Let's see. I think most of them are like early Bitcoiners, high net worth Bitcoiners. Mm-hmm. What we didn't expect, it kind of stumbled onto this one as well, is all of Islamic finance.
Oh yeah, because of the no interest, right?
They can't do lending, or what they term riba, and so we're really keen to start exploring this a bit deeper, because there's deep pools of capital that are looking for returns, but it needs to be through an honest way.
Yeah. So for people who don't know at home, like in Islamic finance, you're not allowed to charge an explicit interest rate. So they get around that in some ways by the terms and conditions are different to typical Western financial loans. The structures are a little bit different, and the caveats might be a little bit different, but they will bake in an implied rate for the loan in the overall repayment, right? But I guess the yield on the utility is the utility of Bitcoin as liquidity in the channel circumvents that, and it opens up a new way of using capital because there's actual utility. It's not simply giving and charging, it's distinct from usury. It escapes any accusations of usury because it has a utility. Yeah, sorry, I just wanted to give that context.
Yeah, this is just fundamentally different than any interest that you would get on your bank account. Because like, I put money in a bank. I don't know where the money is coming from, but I'll get some interest on it. Who knows what wars it's funding or, what environmental disaster it's causing or it's funding. But with Bitcoin, I know where the yield comes from, and it comes from like actually deploying your Bitcoin to help payments get to their destination.
Yeah. And that demand from, I guess, Middle Eastern Bitcoiners, is that institutional demand, or is it in Middle Eastern high net worth individuals who are sort of like, yeah, we're interested in this?
Let's see. I think it's been high net worth for the most part. We've also talked to some of the nonprofits that are, Islamic finance compatible, that they, take in money and they are distributing it. And they realize the massive potential of Bitcoin, and they're using Bitcoin to extend the impact that they can make in a positive way. And so this is yet another opportunity for them to, maintain, as we explore more, we'll see if this can, be Sharia law compliant and, be able to support, give them access to yield and, take their mission even further.
How did you discover that? Because it's such a welcome surprise. It's a really pleasant surprise. I guess it opens up a large part of the world with, extreme sovereign wealth. So like that's a great opportunity as well. But how did that opportunity arise, or that interest arise?
We made the announcement, and people could schedule calls with us, and like it was literally the first call that I had, after the announcement. They were like, well, wait, this isn't yield based on usury. And I'm like, no, there's no lending, no rehypothecation. And like from that first call on, I was not prepared at all for that conversation. But, more and more, I had the interest. They were signing up to have conversations, to do their independent research. And I think kind of like next steps for that is that, we might talk to some, Islamic scholars that might be able to lend their opinion on things. Is a completely different world than what I was expecting. Yeah. I was expecting to talk to Bitcoin treasury companies first thing, but it was a lot of high net worth, a lot of Islamic finance. And, now we're talking to Bitcoin treasury companies, and now talking to the custodians. I think it's just really resonated with Bitcoiners.
That's amazing to hear. I mean, it really is a global asset, and every part of the world will just bring their own sort of culture and requirements and local concerns as well. And you just never know when an opportunity is going to arise like that, do you? And that's the fascinating thing about being on such a public timeline, and you don't realize, especially with an account like mine, but like, I don't know how many followers you guys have or you have personally. I mean, I looked at your account the other day, but like, it really is. There are a lot of people watching this space looking for opportunity, and you just don't know where it's going to come from. Like that took me by surprise, and I should have known better as well. Like I'm Turkish, right? So like, but I'd never, like Islamic finance has never been a concern of mine because I've grown up in Australia. So it's just accepted. Yeah. That's, the environment we're in. But it's like, oh yeah, but the Middle East would care. There are a lot of very sort of pious and, people who are concerned with interest rates and all the rest of that. And I'm like, okay, wow, that's completely blown me away. I didn't recognize that. I mean, first of all, it's such a great thing that we've got an accumulation of Bitcoin through these corporate listed vehicles that is an avenue to provide liquidity to Bitcoin Lightning channels. I think that's going to be a fantastic development. And then it's a question of, like these merchant services. Can they get the business development pipeline?
Yeah, like on the merchant side, what it means is that if you've got all this capital that's, looking for a home, looking for yield, it means that there's competition to be able to provide payment processing service to you. So that means like where we're at right now is we can provide payment processing at 0.25%, for all the transactions that you want to do.
0.25%. So we were just talking about 3 or 4% in some instances of payment processors, right?
What I've been after is I want to be 10 times better than Visa. And okay, there's many ways to be 10 times better. I mean, I could be faster. I could be more private. And here I am more than 10% cheaper than all of the payment processing. Now, I think the barrier that I'll have in the future is that merchants aren't yet comfortable with Bitcoin's volatility. So, and what's coming is taproot assets, where people would be able to issue other assets, issue Tether on the Lightning Network. And I think that's the game changer, because
you're talking about the ability to accept multiple currencies, whether it's a stable coin issued on Lightning or Bitcoin through Lightning. But isn't there also an opportunity, like a treasury management system, where you go, whatever you want to pay with as a customer, we can just convert it into the currency that we want to hold in an instant anyway? Doesn't Lightning give you that capacity as well?
Yeah.
Okay.
Everybody will be speaking Lightning. So Lightning invoices will be exchanged. And what it means is that a transaction can start as any currency and end in any other currency. And it will use Bitcoin as that common language between these different forms of value. Bitcoin
Lightning is the financial translator.
Yeah.
And you just receive it in the way that you want, and the customer pays with the means that they choose as well. So that's fantastic. And like cheap as chips and instant, right?
Yeah.
That's incredible. I remember like the first time Jack Mullis came to my attention, he was posting those videos, right? It's like, and demonstrating real-time payments to his devs, I think in some part of Europe. And like, here I'm paying with US dollars and I'm going to send it to, whatever, Swiss francs, and it'll hit his bank account, and I'm just going to send $1 after another. And he was just demonstrating that. And it's just like, the guy on the other side is just going, yep, here it is. And we can see them side by side. I'm like, this is unbelievable. What the hell is this guy doing? Right. And it's just like, straight through to Bitcoin Lightning, because Strike uses the Bitcoin Lightning Network, right? So it's like, so my background is in, at one point I worked in traditional finance with payment processing. I started in what they call cash management transaction services, right? It's fucking terrible, bro. It was terrible. Like, they were so they just stuck like decades behind back then. Like, I was talking 20 years ago. I remember just like check fraud, how easy check fraud was. This is like in the, not even in the early 2000s, a little bit later than that. And I'm like, you can't be serious. Like, they used to write off like 300, 400, 500. This is just my department, my business unit. In a week, no problem. Yeah, we don't know where that check went, that money went. We just didn't catch it in time. 500 grand, 400 grand, 200 grand, $1 million every now and then. And it's just like, it's gone. 'Cause after a certain number of days, it's like moved through the system and it's dispersed and it's gone wherever it's gone. You can't really do anything with it. And everything else, like the batch processing, you got to wait overnight and all this sort of stuff. It's like, you got to be kidding me, right? So I had that payment processing pedigree to understand, and then later on I did a business case for a pilot trial of a national sort of payment network. So I understood the issues with the payment system, but then when 4 or 5 years later, sort of Bitcoin came out, it just didn't occur to me. Right? Like, oh, this could be an answer to it. I just didn't make the connection that, oh, this could be a solution to that. I knew there was a problem, and I hadn't yet recognized that there was a problem with inflation. I didn't understand credit creation either. I still thought banking worked in a very traditional way, borrowers, lenders, banks as intermediaries and all the rest of that. Complete horse shit, right? And so like, I had the pedigree to understand Bitcoin much earlier than I did. And in the end, I kind of belatedly got it after actually buying it just for a trade. So like, you know what I mean? So like, talk about like a slow learner. Like, you know, I had to learn painfully. And I was like, are you telling me I could have bought this for like, not pennies, but I knew about it between 2011 and 2013 on and off, just sort of like reading about it here and there and having a few chats on different forums, but like never considered buying at that stage. And I was just telling Alan outside, I had money then too, bro. Like I had, when I first started working, I was saving like a demon. Like I was saving so much, right? And not because I was making so much money, but because I just didn't do anything else, right? I was just like, no, I'm going to try and save my money. And to think about what I could have bought back then was like, but I didn't get it, so I didn't deserve it. So yeah, I didn't deserve it.
It kind of takes me back to my first attempt to buy Bitcoin was actually at Mt. Gox.
Oh yeah.
You know, I tried to, you know, get my bank to approve the, you know, transaction. And they were like, what is this? You can't just do that.
Magic the Gathering? You're nuts? How many thousand you said?
You know, and my bank was, you know, kind of like what was called like nanny state, I guess. Just protecting me from, you know, being able to spend my own money.
So are you American?
Yeah.
Okay, so you're from an American bank to, because Mt. Gox was in Japan, right? Yeah. So like that's an international payment you were sending, or did they have an American presence at all? Or?
It was basically, I guess, my first international payment.
Yeah, okay.
And, you know, of course, my bank was like, no, what are you doing? And really my only other alternative that I was aware of was sending an envelope full of cash to Japan.
What?
In order to buy Bitcoin. And
no way.
I was like, okay, maybe this Bitcoin thing was a scam, but sending an envelope full of cash, that sounds like a scam. And then like, is that really what our financial system has come to?
Wow.
Where if I have to like send cash in an envelope, like it's so antiquated. And the only alternatives are permissioned the entire way. And now we've actually got technology that is, you know, unstoppable, that I could just use software, pay anywhere, and now have it be received in whatever currency that someone wants to receive.
So the other day, quite literally like 2-3 days ago, I had to pay my team, right?
Yeah.
And it just didn't occur to me that, oh God, I've got it in US dollars. I've got to convert it and then pay. But I wasn't able to. You know why? Because the FX desk closes at 6 p.m.
Oof. Yeah.
And so and it was like, because I promised them I'll pay them within 7 days of the end of the month. And I'm like, guys, I'm so sorry. Like, I'm going to have to pay you in the morning, right? Because, like, I mean, it's not a big deal, but it is a big deal, right? Like, because you know, if it's 7 days, it should be 7 days. I should pay them even earlier. But like, oh, so sorry. Because I just forgot that, you know, you can't just make and this is a transfer between my accounts with the same bank. So from US dollars to sterling, British pound. So same bank, just transfer between accounts.
Yeah.
And I had to wait till the next day until like 9 a.m. until the FX desk opened up and then processed that transaction for me. Whereas, you know, if it was Bitcoin Lightning, it would have been done instantly. Not only would it have been converted instantly, it would have been paid instantly, settled instantly, and it's just like done. It's like such an antiquated system. Like 6 p.m. cutoff, bro.
The deeper I've gone into it, you know, the more I'm just looking at the global Forex market. You know, how much inefficiency?
Addressable market for you guys?
I think
as in like even the whole Lightning Network ecosystem, you know, like even if it's an extension of what your existing business is that a target addressable market for Bitcoin Lightning as well?
I think the technology that we're building on is incredibly disruptive. And I think the rest of the world needs to wake up to the fact that we're going to move all of the financial flows onto Bitcoin. It just makes sense. It has more open hours. It's more effective. It comes down to the cost of a digital signature between two people. Like, why do I have to go to an office or log onto a certain website? I mean, it's a protocol at the end of the day.
Yeah. Why do we need branches? Why do we need physical? We don't need any of that, right? We don't need any of that.
I'd like to remove as much trust, reliance on trust from the financial system as possible.
Mm-hmm.
Yeah, because I witnessed the call center that I was working at was the same call center that handled the Lehman Brothers bankruptcy. That was the only reason that they were, they still had their doors open following the great financial crisis. It was because they were handling the bankruptcy cases. And I think the world has seen too much of that, where we don't want to be subject to all the credit and the risk of the financial system when, we could just have payments that settle instantly, not have the cash flow issues, not have to deal with all the Forex, having to switch between currencies. We just use standard protocol.
I think we're at the point where there are enough people who are dissatisfied with the status quo. It's not everybody. It's not even close to a majority, but there are enough people to form a critical mass to now adopt new financial services. And I just think we are maybe just a bit behind as an ecosystem to bring them on board, but we're getting there slowly, aren't we? Tell us a little bit more about your company, Amboss. How did you choose the name? And tell us a little bit more about what it can do in this space.
So it was early days in Lightning, and I'm not a coder. So I was looking for the software that I could click buttons on. And I stumbled onto ThunderHub. It was like one of the earliest pieces of software. It came out of a hackathon project.
What is it?
It's called ThunderHub.
Yeah. What is that?
And it was an open source node manager. So it's like that is the interface that you could open and close Lightning channels and send payments. And so I joined the Telegram chat for that, trying to figure it out for myself. There's a couple of bugs. We got it fixed. Sent a couple of suggestions. Maybe if you added a leaderboard or something, it might be kind of gamify things a bit. And then as more folks, joined the chat, to get help running ThunderHub, I was starting to help them out. And the guy behind ThunderHub later became my co-founder. He reached out to me and he said, you ever thought about starting a company? Never occurred to me. So we figured it out. Called up my brother who studied startup law, and he gave us a bit of advice. And, we figured out the initial company documents, and we launched the Lightning Network Explorer a little bit later. And that was right at the time what, PlebNet was taking off, right in the aftermath of, the El Salvador announcement. So we got some early momentum, and I was thinking, my God, like this is what I want to work on. Not any of this other stuff and, transportation. I want to work on Bitcoin. I mean, at that point I was wearing a, buy Bitcoin backpack to work every single day.
Wow.
I was like the Bitcoin guy.
Yeah.
And I think I had spent enough time outside of the space that I think at some point you just need to realize that like you are the person to build this. You have that unique set of skills to actually make some meaningful change. And so that's how we got started. My co-founder was actually in Germany at the time. And I love wordplay stuff. So we were building on Lightning, and Amboss is a German word. It means anvil, like what a blacksmith would use.
Sure.
And in the Lightning space, there was, Zeus. So all this Thor and hammer imagery and the lightning bolts. And I was thinking, what is a robust platform to do Lightning work on? And that was the anvil behind Amboss.
That's a great name. Yeah. It's got a good pedigree. Yeah. I like it.
Thanks.
Thanks for explaining it. It's a really good name now that you've explained it. Because I was wondering, what? How? Okay. All right. Okay. And is that in the iconography of your corporate identity as well?
Yeah. The O of Amboss.
The anvil.
Yeah.
Okay.
The O in Amboss is a big block. It's just a solid block.
I'm going to look that up right now. Really?
because the first anvils were just a big block of iron.
I'm thinking about like anvils from like my cartoon watching days. Oh yeah, I gotcha. Is that the one?
Yeah,
No?
let's
Yeah.
see. It's the O was really, that was the key piece, but it was actually Bitko Yanowski that made our first logo, and he did the Bitcoin Citadel and stuff. Yeah, exactly.
Gotcha. No,
That's the one.
Man, that's fascinating. I think the opportunity that you've outlined is it's incredible. If you guys can capture and facilitate the development of Bitcoin as a means of exchange, it's going to be incredible. Have you guys raised capital? Are you looking to raise more capital? How's the corporate dev working for you?
Yeah, we've raised 2 rounds. We did a pre-seed and a seed, and Stillmark led both of them. And I gotta say, we've loved working with them because they've been pushing us in the direction of machine learning research, because they see this Lightning Network Explorer, and it is a data product, and they realize that we would need support in kind of like, how do you navigate a network? How do you use machine learning and kind of the cutting edge research to actually be able to make a really high performance payment system? And that's what we've been working on. So we put out 2 peer reviewed papers, one on channel balance interpolation and another on Bayesian binary search. But I mean, of course you go super deep in that stuff, but what we have to do is really map the deep tech into very simple products, make this easy to use so that we can actually, keep that snowball effect, to like start making some meaningful change.
So who's doing that machine learning research?
So we have 2 folks on the Amboss side. We got a machine learning advisor that does temporal graphs, and from Stillmark, Vikash from Stillmark is, he was doing a lot of the machine learning research at Google. He also did an Uber for doctors, which was helping to route doctors to like house calls essentially. And he had the pathfinding problems and had to do the machine learning to optimize their routes. So, he's very deep into the research space and is well connected at Cambridge. So that was hugely beneficial to move us forward. So now we're actively applying the reinforcement learning and all of that, graph theory, machine learning to make our payment system work better.
What have been the benefits of that implementation?
One is, as we've been launching Rails, figuring out where do we allocate capital most efficiently in the Lightning Network. If we're going to onboard, a Bitcoin treasury company, and it's, 1,000 Bitcoin, well, like, where do you put it on the Lightning Network so that it actually fixes a payments issue? You can't just, throw it out there and make random connections. You should do it with some strategy. So how do we build those pathways? So we've been using reinforcement learning to make the calculation of, it's called max flow. It's a big calculation. It's used for transportation planning and traffic flow.
Yep.
So it's kind of answering the question of how do you get from point A to point B anywhere in the network as fast as possible. And also just how do you gauge how successful you are? What are the travel times across the city? We're using that exact same calculation to do Lightning Network stuff. So figuring out what's the largest size payment that I can get through from any point to any point. And if we can continue to solve that, then we can do bigger and bigger financial flows, which becomes more important especially in advance of Lightning becoming multi-asset.
Are you able to model the Lightning Network traffic in real time and model that in a similar way to like those navigation apps are able to do as well? Is that something that's actually possible to monitor the Lightning Network like that across all the channels and just have like one big map and read the pulse of the network, where the money's coming from, where it's going, where the demand is.
This is probably going to be the most frustrating answer that I'll give.
Yes and no? Is that
Because Lightning Network is private. There's no global knowledge of the entire Lightning Network, which has been behind a lot of our research because it's private by default.
Oh, okay. So if the channel participants volunteer, is that possible then?
Yes.
Okay. So if they we do want to optimize the level of liquidity in our channel, and we don't want too much liquidity when we don't need it, but we don't want to be short of liquidity when we need it. So they volunteer to a network or to a service like you, and you guys say, hey, we will direct it when you need it and extract it when you don't, so that it's always optimally. I'm giving your answer for you.
Yeah. No. You're spot on because, one of the best reasons of talking to VCs is they give you new ways to think about your company. And what we've actually, what we figured out from talking to those VCs is that we're essentially Waze for the Lightning Network.
That's exactly what the analogy I was thinking about.
We're crowdsourcing information about the Lightning Network in order to improve transportation flows, the traffic flows. So it gives us more insight than we would otherwise know. And there's an interesting concept that Rene Picard, who's a researcher on Lightning, he brought up called the Price of Anarchy. It's basically, if you keep everything to yourself and you're completely private, as is your right, the effect is the system is less efficient than if you shared everything. And now the difference in the efficiency is the price of that anarchy, as he called it.
Yeah.
So this is kind of the balance that we strike. We'll crowdsource some information and use that to be just more efficient.
And what if there are sort of levels of permissions available for the channel to say, well, we will share high-level flows with you, and that will enable you to do what you need to do, but we won't share. I don't even know, because I'm technically illiterate when it comes to all this stuff, right? Yeah. But just from a conceptual point of view, user IDs or whatever, or wallet addresses, we won't share that stuff. We just want to share with you the pertinent information relating to transaction demand and liquidity. And that, that sort of thing. Is that possible to do on the Lightning Network, to say, we're not sharing everything, but we'll share a limited amount of information to get you to make your decisions with your machine learning stuff? Yeah,
we've had to become very flexible at how we're going to ingest that information. So, okay, one, tell me every payment that you've ever made. Well, most of the Bitcoiners, I don't want to tell you what I pay. Yeah. This is why I use this technology in the first place. So it's fine. But if you were to say, okay, how much Bitcoin do you have in this Lightning channel? Well, some of them are willing to share that because they know that if we know, we can route more payments through that channel because it's now communicated. It's part of an efficient network. So that actually feeds more of their incentives. But, we can ingest it either way. But I mean, you could say Google Maps, where are you headed? Or, you could answer the question, is the bus crowded? And either of those answers will tell you about kind of traffic.
And so with the revenue split, so the people who are operating the channels and your service, your customer is who exactly? It's the channel operators?
Yeah. So, basically we'll pay for a node to be basically a server for them to put Bitcoin on.
Yeah.
So we'll pay for that. That'll be bundled into the service, and we'll offer as a service, we'll take a percentage of the assets under management and use that to get your funds connected to the network. And then from there, once it's connected, then we can start selling or leasing out these channels, creating new connections. And then basically the customer for us, the holders of Bitcoin will get rewarded for that. And we run a marketplace. So there's both sides. We're serving the merchants, the payment recipients, we're also serving the asset holders.
Mm.
Marketplace businesses are always more complicated, but there's a network effect. We have to balance, chicken and egg. But I think the technology is naturally disruptive. It's just 10x better than what everything else that is out there.
I agree. I think I'm so happy we had this conversation, because I think it seems that a lot of people are a bit down on Bitcoin as a medium of exchange, when in actual fact, primarily because of the so-called hoarding, the Bitcoin treasury companies buying so much because it's a great store of value. And there are a lot of people lamenting the fact that perhaps the community has lost focus on creating Bitcoin as a means of exchange and in the infrastructure required. I've never seen it that way, because I watch the timeline quite carefully, and I see lots of people, lots of organizations who are focused on Bitcoin payments.
Mm-hmm.
But I like the idea of store of value creating opportunities for means of exchange, quite literally being able to populate the network with liquidity as a result of the Bitcoin treasury companies buying so much, and they're like, okay, now what? So thank you, Jesse Shrader. Thanks for coming in. Tell us, how can people find you online or on Twitter? Let us know.
Sure. Yeah. Check out my website, amboss.tech.
Yep. AMBOSS.tech.
Mm-hmm. And on X at AmbossTech. You can follow me at Jestifer_BTC. But Archie, absolute pleasure to speak with you.
Pleasure's been all mine, and I feel so guilty about our conversation last night. I'm like, I'm not sure. What do you do exactly? It's like, but this is exactly the conversation that I wanted to have with you, and it's been a true joy meeting you and getting to know you better over the last day and a half or so. So thanks again for coming in.
Thanks so much, Archie.